Welcome back to Money, Money, Money. We're in conversation with the experts from Edelweiss to try and figure out how demonetization is impacting your portfolio, your savings, and your future investments. So, Vikas, you've been talking to us about, equity and the sort of equity funds to be in. Let's say if you were to wear an advisor's hat right now for myself, and if you were to look at, the plethora of funds within your own basket, and of course after the amalgamation happened with JP Morgan as well, to someone who's, fairly young, working professional, is not averse to risk, what are your favorite funds right now in the current environment that perhaps you would invest in or you would advise someone like me to invest in?
From my own stable?
Yes, from your own stable.
So I'll advise two funds, and I'll advise you the way to invest in those two funds. Okay, so these are my personal favorite funds. Okay. There's a fund called an Economic Resurgence Fund, which basically, bats on the front foot in terms of taking concentrated bets on sectors. Okay. And the other is a mid and small cap funds. A mid and small cap fund. These are two of my favorite funds. How I would want you to invest is actually something which is very interesting. I talked to you about an STP.
Sure.
Well, we have a facility whereby if you put money in a liquid or an arbitrage fund, each time the market tanks by 1% or more, money will shift from liquid to equity, and provided it's less than 2 lakhs, you get the same day's NAV. Because SEBI allows you same day NAV, if sum of money is less than 2 lakhs. Okay.
And this is an automatic transfer.
This is an automatic transfer.
Just a trigger,
it just takes the pressure off you. There have been several instances when I've been in meetings, my money actually gets invested through the prepaid STP, is what we call it.
Prepaid STP.
Prepaid STP. I just don't bother, when the markets fall, and markets can fall dramatically in a span of half an hour, 45 minutes, right? I don't even bother. So I just get an SMS, your money has been shifted, and I'm very thankful. Okay.
But let me ask you a little more about the funds. What should be my expectations when it comes to returns? And if you're generally talking about it, a little bit more about their life history as well. I mean, typically, are they new funds? Have they been around for a long time? And what should I expect in terms of return? And what's the typical risk quotient that they carry?
Well, these are funds which have come in from the JP Morgan stable, okay, and these are 4-star rated funds over a 3-year time frame. So these are as good as it gets. Instead of talking about the funds, if I can just talk to you about the index per se. I mean, if you look at the mid-cap index, which has, over the last 3 years, I think the mid-cap index has delivered returns in excess of around 33%, 34%. It will be the endeavor of funds like these to actually beat benchmarks like the mid-cap index, and that is the best I can do. There are several regulations, I can't talk much about it.
Sure.
But these are my personal favorites, full disclosure. And I'm basically a slightly aggressive investor. I like taking concentrated bets, which is where it comes from.
Okay, those are some interesting ideas for those of you who are out there who have the appetite for risk, slightly aggressive, but do your own homework and research. We're just sharing some ideas over here. Anil, now let's also talk about something which a whole lot of people out there are still wondering and thinking about. Whether this correction in the housing market is presenting them with maybe a lifetime opportunity to get their own home. What do you think?
The time to buy your own house is when you have the money and when you need it. Okay. It's very often it's a once in a lifetime event for most people, and they cannot optimize it beyond a year this way or that. Okay, so it's not as if you'll say I'll buy 3 years later or 5 years later. So if you're in the market for a home, my advice to anybody is to go ahead and buy it and take a home loan to finance your home, because over a period of time, we are a high inflation economy and property prices rise, and your home loan and your income rises, so your home loan EMI stays constant and becomes more and more affordable. So I would advise anybody to go ahead and buy a home now.
And what's the thumb rule that typically you would advise people? The ticket size of the property that you're looking to buy, it can be up to how many times, let's say, of your annual income, or what are the sort of thumb rules there?
Normally people buy properties between 4.5 to 6 times their annual income. Okay, and when they're buying properties which are 6 times their annual income, that means that the properties are relatively inexpensive, which is why they go ahead and do it. And when it comes to 4.5, it's a little expensive. So that's the range. 5 times the annual income, I think, should be the value of the property that you're looking at.
Okay, and that's about buying your own home, and as you mentioned, that's a real aspiration and need-driven thing. What about buying something purely for investment? Then is this the right time, or should you just wait it out?
Investment has a completely different logic, because then you're also looking at your asset allocation and what the competing investments are, and your expertise when it comes to managing property. Now, one of the things about property is that it requires active management, unlike let's say an investment mutual fund or shares, which you can access sitting in front of your laptop. So given all these considerations, yes, if you have the smarts which can evaluate an investment and can manage it, please go ahead and buy it. and you will get leverage when it comes to investing in real estate as opposed to other asset classes, which is the only advantage that you have. Yeah.
Okay, well then, to round this conversation off, let's also talk about gold. Prices have been trending down, and of course this whole demonetization bogey is taking its own time to settle. But what's the sense? Should gold in the current environment, as we're looking forward to 2017, should it have a place in the portfolio?
See, gold is usually an asset class which takes prominence only during instability. You know, when consumer confidence is not very high, when your interest rates are on the higher side, and you know, things like the purchase manager index starts dipping, you really don't have a clue as to what's happening. That is when gold typically tends to find more and more of a place in terms of an investor's portfolio. So you have to ask yourself the question, do you see that happening in 2017-18? And I think that will automatically answer your question in terms of what proportion of gold you need to have in your portfolio. You need to have a bit of gold, you need to have an asset allocation, you need to have a little bit of property, you need to have gold. And as Indians, we will always have some part of our monies in gold. But instead of tending to go overboard on gold, I think the question to ask is what proportion of gold should I have considering a slightly brighter situation, economic situation going forward. And I think it will not be too much in your portfolio.
So some sort of a rough, perhaps a percentage number that personally you would be comfortable with? Not
more than 5 to 8% in my portfolio.
Of the portfolio. Okay.
And that too if I'm pushed by my wife.
That could be an important trigger, absolutely. Well, gentlemen, it's been a pleasure talking to you. Thank you so much for taking out the time and sharing those insights with us. Thanks very much.
Thank you.
That's it on this week's edition of Money, Money, Money. Thank you for watching. We'll see you again with another theme and other experts, same time next week.